Everybody, welcome back to the channel. My name is Mitt. On this channel, I talk about stocks, investing, and finance. Cathie Wood, the owner of the ARK Innovation ETF, who owns about $1 billion of Palantir, which is one of the stocks that my heaviest position is in, just did a interview, or I don't know if you call it interview. It's kind of like their YouTube content that they put out. And this video is going to be a short summary of all the things she said, sort of getting to the key points so you can understand what she's thinking about in terms of the economy, macro level economy, inflation, logistics, and how everything is actually going to turn out over the next 5 years. And that's the first place we probably got to start off, which is that she has a long-term horizon. So before I get into this, I'm going to go through a couple things. Number one, we're going to talk about her long-term horizon on stocks. That's the first thing. Number two, we're going to talk about her thoughts about inflation. Number three, we're going to talk about her thoughts on innovation and the stock market recession and the likelihood of a stock market recession and what that would mean for innovation. And then finally, we're going to talk about what the return she expects over these types of innovative stocks, especially the ARK ETF. So first of all, let's talk about the time horizon. One of the things that's happening right now in high growth tech companies, and I just did a video about why they're crashing, is that investors are thinking that they're too risky to invest in because interest rates are going to rise. And when interest rates rise, that means high growth tech companies that don't really make a profit or that don't make that much of a profit are valued less on their future cash flow earnings because the cost of borrowing that money or even making money is going to be more expensive, which is why the asset of a high growth tech company, something like a Palantir, a DocuSign, Adobe, etc., simply becomes way more expensive. So the first things Cathie Wood talked about is that they have a 5-year horizon. And one of the main things she says is that when most institutions and hedge funds ultimately get out of high growth tech company positions, they go back to invest in benchmark stocks. These are the Apples and Fords and GMs of the world, and more traditional value stocks, something like a Costco, which is like you always know Costco is going to be around. The growth potential is not that high because it's not really innovating. It's just like a store with products. But you also know that it's going to be more safer and less riskier because it's a store with regular products, and everyone has to go to a store with regular products. So one of the first things she mentioned is that because her and her team at ARK have a 5-year horizon, they're really not worried about this. I mean, maybe she's really good at speaking and it's very good for her to sort of BS stuff, but I didn't think it was BS. I mean, sort of the way that she was explaining these ideas was like, we know that innovation is going to change the world. We know that technology is going to take over the world, and we are not worried about the fact that in the short term, investors are feeling like, oh, these assets are risky, because she knows that in the next 5 to 10 years, these assets are going to be incredibly cheap based upon where they are right now. So that's the first thing. She also thinks that this is a lot of FUD, which is fear, uncertainty, and doubt. And she knows that her stocks are going to be thrown out by investors because they devalue tech stocks when this type of volatility is happening. So her argument is that I have a better conviction to double down. And what she kept saying was that I've seen this over and over again in my career when I've seen cycles of transitions happen between tech stocks and value stocks. Our stocks, the DraftKings of the world, the Palantirs, DocuSign, Teladocs, they all get undervalued, and the money goes back to like an Apple of the world. Cathie reiterated that they don't have benchmark stocks. They don't use stocks that are in broad-based indexes like the NASDAQ or stuff like that, right? They invest in the companies that are such outliers because of such a competitive advantage they have in the context of technology and innovation that they can expect much, much, much harder and longer returns or more exponential returns versus your traditional Apples or Microsofts of the world. So that's sort of her first claim, which is that the market is worried, but she's not worried, particularly because of the 5-year time horizon. Now, the next argument that is really important to talk about is her concept, before we get into inflation, is her concept around stay-at-home stocks. So a lot of the stocks that she's invested in, Zoom, for example, being a really big one, is referred to as stay-at-home stocks. These are stocks that benefited from the pandemic that we had because every company obviously went digital and they went to the cloud, which means that these companies were highly valued because if everyone's using Zoom, then Zoom's a much more valuable product than if it wouldn't be if people weren't using Zoom. The pandemic accelerated that. Her argument here is that stay-at-home stocks are not stay-at-home anymore. They are stay-at-global stocks, right? That was kind of the terminology she used, which is that these stocks are going to be global stocks regardless of what we think. The pandemic accelerated the rate at which people would start using these products at scale, and we're not going back. That was sort of her main thesis, which is that technology, because it's advancing, means that we cannot go back to the way we used to do things. If everyone's using Zoom as an end-to-end communication structure, even if you go back to the office, because work is now more remote and more dispersed, Zoom is going to have immense value over the next 10, 20 years because it is a product that was not just because of the pandemic, but rather it's a product that integrated and fully diversified the way that people live their lives regardless of if it's their professional life or their personal life. And Zoom plays an integral role in that. You can sort of see this with other high growth tech companies, right? Like Facebook. It was first just a blog, and then it became integrated as an entire end-to-end messaging communication system that's competitive with iMessage. Because once it got scale and once it became part of people's lives, it stayed. Her argument is that stay-at-home stocks are not going back to home, right? They are becoming the global hegemons of how we understand technology, which is why she's doubling down her conviction on these stocks and doubling down her conviction that these stocks are going to matter. The rest of the market doesn't understand that. Innovation doesn't stop for anybody, so I'm going to keep buying the dip, which is essentially what she said at that moment in terms of buying the dip. Inflation. Now, a couple things here. She thinks inflation is transitory, right? At the end of the day, she thinks that inflation is overblown and that ultimately it's going to be transitory. Transitory means that it is happening in a cycle. It is not here for the long term. It's not going to stay. And that once it does become transitory, then there is going to be a much bigger rotation back into tech stocks. When inflation is high, tech stocks go down because, again, the interest rates have to rise. When inflation gets lower, tech stocks get back a lot of their value. Now, her argument is that the way this is going to happen is that the economy will not drop into a recession, but she thinks there will be a fear of a recession. And that fear of a recession will happen because of supply chain issues, particularly chips, which are the shortages we have right now that have affected used cars at a exponential level in terms of just like the price that's been going up for there. And then logistics. Logistics is like inventories and different things that organizations or companies need to have in order to actually get that supply out into the market. Because of the inventory and chips supply chain dilemma, it will lead to the fear of a recession, but because she believes that inflation is transitory and ultimately it's not going to matter as much, that fear of a recession is going to be enough for people to go back into high growth tech stocks, because when a recession or the fear of a recession happens, value stocks lose their value. Again, the difference between value and tech stocks, value is something like a Costco, tech is something like a Palantir. Palantir is being evaluated on its future ability to, change the entire world with data analytics. Costco is being evaluated on if they can sell you enough turkeys for like, I don't know, $20-$30, right? Or the rotisserie chickens. That's like their big thing for $4.99. And they lose a lot of money on that, but they get you to get the Costco membership, right? So that's where they get their value. So when fears of a recession happen, investors leave those value stocks because that's when the macro level economy is changing. People are going to lose their job. These companies are not going to be as valuable anymore, and they go into high growth tech. When inflation is high, that's when high growth tech money goes back into value because the cost of borrowing money becomes higher because interest rates become higher. High growth tech companies cannot borrow money as cheaply as they used to borrow money, and they don't really have profits to be able to fund themselves because the whole point is they're high growth tech. They're not trying to make profit. They're trying to get market share, which means they have to take on debt. And if it's more expensive to take on debt because the cost of borrowing that debt is higher because of interest rates, that's when investors flee high growth tech stocks. So her argument is a recession is not going to happen, but the fear of it happening is ultimately going to lead investors to leave value stocks. And once inflation becomes transitory, the catalyst of investors leaving value stocks plus inflation being transitory and eventually it leading to deflation, it's going to go all back to tech and innovation. And once that happens, then it's just a flywheel effect, right? That's when the conviction gets higher. That's when more and more people get into it. That's when these companies start getting more and more capital, so they're able to give more and more results. And that's when you go to the aforementioned moon in order for you to be able to move on into the big winners, right? So that was ultimately her argument. Now, last two things I'll say. Number one is China and her thoughts on China, and then we'll get into her overall concept about the returns from the ARK Innovation ETF. So China, she's very worried about China, especially because of their sort of government mandate about common prosperity, which is China's whole idea of trying to rein in the tech tycoons. This is where we saw people like Jack Ma, who is the founder of Alibaba, which is, Alibaba's getting slammered. It's like from $308 went to $118, obviously losing a lot of its market value because China kind of got rid of Jack Ma, right? We didn't see Jack Ma for a while after he criticized the government at some conference. He did a speech and it wasn't even the craziest criticism. He just said something and they didn't like it, and we never heard from him again. Didi was delisted from the stock exchange. This was really bad because when Didi got delisted, basically it showed the world, like China literally doesn't care. They're going to make you delist off the New York Stock Exchange if they feel like there's a concern. Didi is kind of like an Uber for Asia type, or Uber for China type of company. So at that point, she believes that China is cracking down on their tech tycoons, and she's very worried about how China ultimately interacts with their companies. This also influences the fear of a recession because real estate is 75% of consumer savings in China, and the government in China is very focused on getting rid of a lot of tech tycoons and people who are winning in real estate. So the sort of common prosperity argument may be better for the common people of China, theoretically, but it is ultimately going to hurt the macro level economy, or at least create enough fear in investors that because of what China is doing and how they're reining in their tech companies, a lot of that value is going to dissipate, or the fear of it is going, the perception of it is going to dissipate, which is going to lead to a fear again of recession. But ultimately, she doesn't think that a recession is going to happen. She is also concerned about China's economy slowing down. Iron and ore, which are sort of the two main commodities from that area, are down about 50% in prices. Perhaps this slowdown could become a recession, but China hasn't really had a recession in the past 20 years. So that's one thing that she's thinking about in terms of what's going to happen in China. Now, final thing, in terms of her thoughts on the stock market, she believes that she's actually in ARK Innovation is actually in a better place than it was in February because she's doubled down on her conviction. She understands the market a lot better, and she believes there will be a 5x return over the next 5 years compounded from the ARK Innovation ETF and from some of the highest conviction stocks that they have. The reason for this is because she believes there is a $10 trillion market opportunity for innovation. And the best example she gave that really made me understand what does she mean by $10 trillion market opportunity? Like, well, what is she talking about here? Is that there are S curves feeding off top of each other. S curves in business are like, or tech, or I guess stocks and growth, right? And just growth in general are exponential curves in which you have something and then it goes to a point where it gets so exponential that it forms sort of an S on the curve, on the graph. She believes, for example, robo-taxis, which is their really bull case for Tesla, creating this like network of autonomous vehicles, is going to be a S curve in which it scales exponentially of autonomous vehicles that intersects with artificial intelligence because a lot of data is required in order to make autonomous vehicle networks possible. And energy storage, which is another S curve, is also going to intersect in the middle of those two because you need a lot of energy to have electric autonomous vehicles. So if you think about something like robo-taxis, you have 3 different S curves intersecting at its core. AI, you need all the machine learning and data. Energy storage, you need to be able to create the battery and all the technology to store all that energy to make it happen. And then the actual autonomous vehicle cars on the road picking up people at scale, creating an entirely new market opportunity. So those 3 S curves interacting with each other leads to the fact that she believes that because there is a $10 trillion market opportunity over the next 10 to 20 years in the stocks that she has the highest conviction in, this period right now is just some fear, some uncertainty, some doubt. She's doubling down on her conviction because she knows that if this opportunity is going to materialize itself, which she's very convinced it will, then the stocks that they have are ultimately going to be the biggest winners. And ultimately, that's my takeaway as well. I mean, at the end of the day, it's hard to refute that type of logic, especially if you bought into high growth tech stocks. I obviously have a very big position in Palantir, so that's a thesis that I bought into heavily. And I think their data analytics capabilities are going to be extremely important over the next 10 years. And because it's going to be extremely important, that's when the stock is going to moon, hopefully, when the rest of the world recognizes how important it is as well. But in the short term, the rest of the world usually doesn't recognize those types of things. So those are my thoughts on what Cathie Wood just said in her thoughts about inflation, the stock market, China, and ultimately what she's doing with her money. Let me know your guys' thoughts. Let me know if you agree with her, disagree with her, and I look forward to reading the comments. My name is Mitt. This is the Daily Business Show. I'll see you in the next one.